The economic growth in Sub-Saharan Africa is likely to accelerate to 5.2% this year. That's from 4.9% in 2013. This is in part due to growing investment in natural resources and rising household spending. Now, according to the World Bank, the region attracted foreign direct investment worth around $43 billion in 2013. This followed oil and gas discoveries in Angola, Mozambique, and Tanzania. Also bolstering growth last year was copper production in the Democratic Republic of Congo and iron ore smelting in Sierra Leone. The international lender has, however, cautioned on challenges that may undermine expansion. This includes a weaker demand for African commodity exports, a surge in food prices, and the chronic issue of lack of infrastructure. Now, the bank says more spending in key sectors of the economy is needed for most countries in the region if they're to achieve a lasting transformation of their economies. Now, in a bid to add more financial listings, the Rwandan Stock Exchange plans to launch a market for smaller firms and plans to encourage more companies to use the debt market to raise capital. According to the Bourse CEO, the initiatives are part of a broader bid to put the tiny African state on the map as a regional financial hub. But the 3-year-old stock exchange has a long way to go, especially considering that it has only 5 listings and traders still scribble on whiteboards. 2 of the listed firms are Rwandan, with the other 3 cross-listed with Kenya. Their combined stock market value is about $2.1 billion, or just below $1 billion if only the 2 Rwandan firms are counted. The Rwandan Stock Exchange is part of a plan taking shape that could include attracting fund management firms and creating a regional center for technology. The Nairobi Securities Exchange has launched their new brand as part of their 60-year celebration that will run throughout the year. The Bourse intends to carry out a number of activities, including the listing of the NSE through an initial public offering on the main investment market segment. Now, this will essentially complete the demutualization process by converting it into a publicly listed company whose shares are traded on the exchange and are available to all Kenyans. Speaking during the event, NSE's board chair, Edie Njogore, hailed the ability of the Bourse to raise funds through treasury and infrastructure bonds for the government. Njogore mentioned that they are also looking forward to the dual listing of the upcoming sovereign bond issue by the government.
We expect that working with the Capital Markets Authority, Nairobi Stock Exchange will provide this platform for corporates, big business, instead of going to our local banks to borrow money, for them to raise their capital using the stock exchange and allow their businesses to be owned by more Kenyans, raise their money at the exchange for expansion, for development, for capital investment. This platform will also help make sure that banks begin to do business.
Food demutualization will open the door to the long anticipated self-listing. The board has appointed a transaction advisor who are currently very busy working towards self-listing of the exchange through an initial public offer before the end of June this year. The IPO will enable a wide cross-section of Kenyans to own a piece of the exchange and to share in the future financial success of the company with very rich Kenyan heritage.
It's time for a short break, but here's what we have coming up next. In spite of Egypt's gloomy economic outlook, something is driving the sales of Mercedes in the country.
Biz Asia. Asia means business.
Welcome back. Now, Marriott International will open 30 new hotels in South Africa by 2020. It seeks to expand following a $189 million buyout of Protea Hospitality, a South African company with 166 chains. The Marriott Group is aiming to triple revenue and to triple rooms to 75,000 across Africa and the Middle East within a 6-year period. The hotel under construction in Africa, which will have a total of 5,000 rooms and will require about $1.5 billion of investment. Marriott overtook competitors to become the largest hotel operator on the African continent with 125 hotels and 14,000 rooms in 10 countries. This when it announced the acquisition of Protea Hospitality in January. Tough economic times in Egypt has led companies to think of new ways to attract clients. One of the industries hardest hit has been the automotive industry, which has seen a drastic decline in sales amid the political chaos in the country. Yet Mercedes, a premium price brand, came up with a rather innovative way to bring clients in the door. A family outing with kids' activities cleverly included a test drive of some of their new models, bringing families a step closer to their new luxury rides. CCTV's Adel Mahroui reports.
After the January revolution, Mercedes sales dropped 50% in 2011. It's been gaining momentum ever since, but to spice sales up, the GNA authorized dealer in Egypt, GNA, was throwing a party for kids. Circus shows, clowns and many more activities that could keep children entertained for hours. But of course, they are not the company's target client.
For the kids, it's fun. But for parents, it's more exciting. They get to test drive the newest Mercedes models.
We started operating from this facility last November. So we want to make awareness for our customers in the area and in the Great Cairo for the new facility. So we decided to make a family day. We have like 700 customers with family are supposed to come today, and we have something like 200 test drive.
Using kids to attract their parents seemed successful, particularly on a Friday.
Fridays are usually family days. It's the only day I am committed to take my family out to these activities. I can do both, look for cars and take them out at the same time.
Actually, it will be kind of a hassle, doing a test drive or checking cars. You know, a 3-year-old is never interested in such things, so having kid activities here really helps. It really helps.
Almost all models were available for testing, and to Mercedes, they see test drives an effective sales strategy.
Test drives constitute a major role in the sales process nowadays. It's very difficult now that you buy a product, especially when it is very expensive product and you pay a significant amount of money and you not having 100% clear idea what do you expect.
But does test driving get a customer closer to buying a car?
Yes, definitely. The test drive is a more of a relationship builder between you and the car.
And for those who are not serious about buying, they still get to drive one of the world's known luxury brands. In 2014, GNA is expecting 4,000 cars in sales. If successful, it would have almost returned back to its normal sales before the revolution. Adel Mahroui, CCTV, Cairo.
All right, let's take a quick look now at the markets and see how they close this Monday. We start with the Nigerian All-Share Index, which is closing the day today in the red, shedding 0.22%, to the JSE, which is closing the day today in the red as well, shedding 0.87%, to the NSE, closing the day today also in the red, down 0.79%, and finally to the EGX, which closed the day today in the green, adding 0.08%. And that's all we have for you for business tonight.